understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time. Welcome to another episode of the Tech Behind FinTech. I'm your host, Chiagozie. So, listen, guys. Today we're going to have an episode on crypto kiosk. Things didn't work out. The guest could not make it due to an illness. So, like they say, the show must go on. We definitely wish him the best. So, I looked through my archives and I saw an episode that we did earlier this year on navigating the crypto landscape in 2025. So I wanted to keep it within the same theme since this was kind of a last minute change up. So I'm going to air that episode right now. So you guys can, it's still revolving around crypto. And it was a really good episode. So without further ado, we will bring that to the stage. See how this is going to work. It's my first time doing something like this. So bear with me. And let's explore it. Upwards. Give me a second. Let's get into the beginning because I don't want to say. Welcome back to another episode of the Tech Behind FinTech. There's a lot of things happening. We're bringing back one of our former guests. It's been a while since he's been on the show, but he's a Tech Behind FinTech OG because he's been here since the beginning and he's been on multiple episodes. Chiagozie Iwu. How are you, my friend?
Very good. Very, very good. And how are you today?
I'm doing wonderful, man. You know what? There's been so much news on the crypto space, especially with this new administration, various things happening, and I've been wanting to talk to you about it for so long. Ever since we saw the rise of, Bitcoin creeping up to 70, 80, now six figures, and other things happening in the industry, you've been a person who I've been wanting to call and talk to. So I'm happy to, instead of calling you directly, I'm happy to bring you on the show. So not only can you educate me on what's going on, you can also educate our audience. So I'm really, really excited about today's episode. Let me do some housekeeping and then we're going to jump right into it. We are streaming live from Facebook, LinkedIn, and YouTube. We have those going on. Once again, today's episode, navigating the crypto landscape. And even though he's a returning guest, let me read his bio. Chiagozie Iwu, fintech, blockchain enthusiast, and serial entrepreneur with a proven track record of success in the industry. Recently exited his last venture, a blockchain-focused company that revolutionized the way cryptocurrency is utilized for financial activities in Africa, bringing extensive experience in creating and scaling disruptive technologies, driving growth and revenue, and managing cross-functional teams to drive success. Passionate about the power of blockchain to transform business in the world, always seeking new opportunities to innovate and make an impact. Connect with him and explore the possibilities. Wonderful, wonderful, wonderful. So many things to discuss. Let's talk about the elephant in the room. Bitcoin hit six figures over the last few months. What are your thoughts about it?
Yeah. Okay, so of course, Bitcoin increasing in value is always a good thing for the space, right? And I think that has been almost 100%, if not more than 100% increase over the last 1 year, right? And it has been due to a number of factors, right? Of course, there's been a lot of institutional play growing in Bitcoin over the last 2 years, but I wouldn't just put it to the institutional play. There's been a lot of positive vibes about the space generally, right? And it's a good thing for the crypto space. It's a good thing for crypto adoption, especially with Bitcoin, right? And personally, I think it's going to shoot up even more, right? With the trends that are coming, with a lot of use cases being built, with a lot of proper use cases being built. Of course, like we were saying before now, is a mixed bag, right? Is a good thing, is a bad thing. I'll talk about the bad aspects later, and hopefully the audience would also learn how to stay away from these bad aspects of crypto. But with relative to the price of Bitcoin, yes, the rise is always a good sign for the space. Would there be a fall? Yes, at some point, right? But if you take the 4 year, if you take a 3-4 year moving average, right, you'll find out that the trend has always been upwards of Bitcoin. And I am very, very positive that Bitcoin is going to shoot up to one of the highest asset classes in the world within the next 5 years, at least. Yeah.
Listen, you are an extreme early adopter. I mean, when I've had you, and guys, you can look at the previous episodes. If you put this man's name in anything crypto on the Tech Behind FinTech, he's probably going to be one of the guests talking about it. But so when we talked originally, I mean, you've been in it, back in your banking days when you were working your W-2, you always invested in it. You were the guy always talking about it in Nigeria. So, now that it's hit 100, is it an "I told you so" moment? Like, what do you? Is it like I've been saying this all along? I've been talking about it way before when it went to 17,000, dropped back to 8,000, 7,000. People bailed. People were saying, "Oh, I told you so. This thing, you're going to lose all your money." You've been consistent. Now that it is 100K and more, it goes back for 90, 100, depending on the news. What are you? Are you at? Is it an "I told you so" moment? Is it what is it? How are you feeling right now?
I think everybody in the world has the tendency to say "I told you so" because it's a good feeling, right? But yeah, it's something I think I don't know when I was first on your show, but at least we've been talking about Bitcoin since Bitcoin was less than $200 in price for a Bitcoin. I remember buying Bitcoin at $70 something per Bitcoin, right, for the first ever time I bought Bitcoin. So yeah, it's an I told you so moment. I had colleagues. I remember back in 2012, 2012, right, which was I read the Satoshi white paper in 2011. I became educated myself fully more in the space in 2012. And my nickname in school was Bitcoin, right? And there were a few people. I was in uni then, right? And there were a few people that got to know about cryptocurrency because of me. And sincerely, we still talk today. And there may be even way times a million of the probably any amount of money I've made in the crypto space, right? And it could be I told you so moment, right? That once you see a technology that is disruptive like Bitcoin, it's obvious. I never understood why people could not see it, right? It was literally obvious. It was staring in the face, right? That this is something that is disruptive. This is something that has the power to basically find the next 100 years of the financial industry, right? And yes, it feels good, right, for Bitcoin to rise. But with respect to the trends of the overall crypto space, while there is a lot of feel good moments, right, there is also something I've been very consistent in making sure people stay on the right track in the crypto space, right? There is still a lot of negatives, right? And a lot of time, this negative tends to get mixed into the noise, and this is the reason a lot of people, like I said, I've talked to a lot of people. I know a lot of people the reason why they didn't buy Bitcoin in the first place, right? Because these negatives have the tendency to mix into the narrative, and it creates a certain aura about all these things and how it works. And hopefully going forward, even though I don't see that happening this year or next year, right, because negatives are going to dominate this year, right, but I hope people get more educated on what this is and actually understand what Bitcoin is all about. And I hope the rise in prices will make people more curious to actually go read the Satoshi white paper and see what this whole technology is trying to do, right? Yeah. And
So,
by the way, I believe the actual value of a Bitcoin is over $1 million, right? So I
okay,
still think Bitcoin is valued. Yeah.
so you're saying it's going to 10x what it is right now?
Yeah, I think currently the real value of one Bitcoin is over $1 million. Yeah. So
So,
it's still massively undervalued. Yeah.
look, I've always maintained not having an emotional dog in this fight. That's been my main. Like,
Yeah.
okay, have I invested in crypto? Yes. Am I going gun ho over crypto? No. Like, I like real estate. I like things I can
Yeah.
walk inside of, open doors. Even I mean, everybody likes stocks too. I like that. I'm more of a diversified thing, but I'm more of a real estate guy, right? But I've never, but I know. So because of this middle ground I always play, right? I talk to both sides. There's still people. Oh my God, I wish I have someone that I wish he was here, because this guy would argue to death that it's a gamble. It's not a real asset class. It doesn't have any real value besides it being totally. It's just speculative, 100% speculative. What do you say to the people who still feel that way?
Oh, yeah. By the way, their opinions are not. I won't say their opinions are not completely unjustified, but the thing is, there is a bridge in terms of education of what Bitcoin really is, and I think that is why people have their opinion, right? Why does the US dollar have any value? That's the first question I'll ask somebody, right? Because governments give it value, right? Governments have given it a stamp of authority. Why does the British pound have any value? Because the government has given a stamp of authority, right? There is no gold back in the US dollar, or there's no gold back in the British pound, at least as far as since 1970, 71, after the gold dollar standard fell through, right? And even when there was a gold back into currencies, right, the world realized the hard way that there was a very inefficient system to actually derive value from currencies, right? Bitcoin does the opposite, right? The value is not so. Why are governments inefficient, right? Do we need governments? Yes, 100%. I'm personally libertarian, but I'm not the crazy libertarian that will tell you that, hey, governments don't have any need or any necessity, right? But do we need governments? Yes, governments have use in society. However, right, fiat currencies derive their value from what sometimes is perceived as a very inefficient system, right? Whereby one person, right? So the US is an outlier, right? Western society is an outlier because you've had stable governments for years, right? Even people don't even understand how even fragile these governments are in Western society, right? When things are dependent. I come from a country where governments are fragile. I come from a region of the world where governments are fragile, where one military coup and a lot of institutions and a lot of wealth could be lost. I know people that have lost wealth because of a changing government. Right? They have the records. I own this particular asset class, but because you're not from a certain tribe or you're not from a certain place, all of a sudden they lose value and they lose wealth, right? So, but when you have a system whereby the authorization between the financial system is not dependent on any authority, it's completely decentralized. The data that gives you that authority is completely decentralized. It's pushed over thousands of nodes and hopefully millions of nodes as time goes by. And there is no central authority giving you that power, right? Is a more validatable system than having one central authority give power to an asset class. And that is where Bitcoin derives its value. That is the whole purpose of Bitcoin, because it is decentralized authority given power to the asset class, right? Meaning that, hey, if one person goes gung ho and says, hey, I don't like Bitcoin and destroy my node, or I don't like the fact that this person owns 20 Bitcoin, right? I want to free, it doesn't have any power, right? The whole network has to agree on that particular decision, which most of the time, right, gives you a more valid opinion. And that is a true democracy, right? So that is simply the way, because it is a whole financial system up on itself, right? The whole traditional financial system is based on the US dollar, the British pound, whatever currency, right? As far as the world is concerned, is the US dollar, right? While Bitcoin, the financial system being built around Bitcoin, is being built on an alternative solution, which is decentralization. That is where it gains its value. Has people used this for speculation? Yes. The stock market has purpose, right? The stock market is used to raise money. Do people use the stock market for speculation? Yes. The FX market, the US dollar, is the most speculated on assets, right? For foreign exchange speculation is 85% of the foreign exchange markets, right? What's the essence of the foreign exchange markets? The imports and exports, international trade. But 85% of the market is speculation. And the truth is, you cannot just say, hey, speculation is a bad thing. No, speculation provides liquidity to the stock market. It provides liquidity to the foreign exchange market, to the bond market. Without speculation, these markets are going to be dry of liquidity and it's going to lose its purpose. And the lack of liquidity gives less value to an asset class, right? So yes, people speculate on Bitcoin to make money off speculation, but that doesn't remove the fundamental use and use case behind Bitcoin. So yeah, I don't know if that is enough explanation, but it's something we can go on and on and on. Yeah.
No, let's do it, man. We have the time today. You know what? I think you know we're both from Nigeria. You're born, raised, educated, worked there. I was born in New York. Families from Nigeria. So it's a different perspective on certain things, and things that in what you just described that I take for granted. Yeah, because of my family, I know what the naira is. I know, in the early 1980s, my mom would talk about, it was a time the naira was worth more than the actual US dollar, right? But
Exactly.
to your point now, right? We now see where the naira is the inflation is not worth what it's worth. In the US, there's a tendency to take things for granted in a sense that that currency, the dollar, yeah, we're good. I'm like, it's not even something that registers in my mind to how to protect it. It's like, oh, okay. You want to worry about inflation, so you want to put your money in certain assets because okay, it might lose value over time, but real estate's there, stocks are there. Put things that will increase the value to balance it out. I get that, but what you said in your description in terms of governments, it could be a coup. All of a sudden, you had X amount one day you're worth, now it's nothing, and now because the government that backed it is not stable. So I think a tendency of growing up here, everyone goes back and forth. They have their different political sides of Democrat, Republican, all this stuff. But at the end of the day, the level of government is stable. Like, I don't think we don't question that to extent. You might have your conspiracy theories, but we don't question it. But you take it for granted if one day the government can change because of the military coup or do something like that. Now you can see if you had money, and I can see the point, right? Like, if I had some assets out of naira into Bitcoin, right? Over the years, you would fare very well compared to where the naira is at now. So,
oh yeah,
I get it from that point. And some of the people who I've talked to who are opposed to it, they also grew up in the US. Some are by way from Nigeria, but then that exposure is not there. That risk for them is not there. So it's interesting, to look at both sides, because let's say that in 2012 you have your money all in naira, you didn't buy any Bitcoin, right? It's a whole different conversation where you're at now with everything that you've accomplished by taking it out and putting it in that particular asset class.
oh yeah, 100%, right? And I had some Bitcoin I held between 2022 and 2024. Um, I just never wanted to sell it, right? And I am glad I never did, right? But one of the things I noticed is, hey, it's just doubled in value, right? To the British pound, right? Which is where I'm based currently, right? The Bitcoin doubled in value. Yeah, 100% rise in the value of any asset is way more than the traditional index. But when it comes to the Nigerian naira, I can tell you that it multiplied by 20 in value. Right. Which for somebody living in that part of the world is a lot of money. Right. So the point is, right, a lot of people, so yes, if you're living in the United States, if you're living in the Western world generally, right, even someone living in China, you might see a lot of stability, right, on in the government, right. But when we talk about building systems, right, the light bulb, the invention of electricity was done probably 200, 300 years ago, right? But it has led to an infrastructure that is going to last for over 10,000 years, probably as long as humanity exists, right? We're going to keep deriving ways to generate energy, right? And electricity is just going to be transformed in different forms, right? The point is, right, one of the things about disruptive technology is, can this technology last 100 years, or would it live beyond 100 years, right? And we've had overtime technology that has lived beyond 100 years, right? governments, the stability of the US government, can it last over 200 to 500 years? It's questionable, right? The stability of the British government could. I'm sure somebody that lived in, let's say, 700 Roman Empire during the during the height of the Roman Empire, right, during the height of the Western Empire, must have seen the Roman coins as like, hell, oh my God, this is the ultimate, this is the ultimate asset to grab, right? Have as much coins that have Caesar's inscription in it and things like that, right? So, but the truth is, right, if they didn't build real assets, right? Would they have, with the fall of the Roman Empire, would they have still been wealthy? No, right? The point is, this technology is something that can outlive any government, can outlive any individual, can store value over for the next 1,000 years, right? And still have relevance, right? Because it has something that governments do not have. It has the ability to basically protect itself from multiple points of failure, right? Is Bitcoin perfect in this? Hell no, right? But the thing is, it is the POC behind this, and there are a lot of improvements being made, not just on Bitcoin, even in other cryptocurrencies, right? So, linking it out that hey, these are speculative assets, is a digital asset, is some weaning babies or something, right? It's the wrong approach because if you do not understand the underlying technology, that is when you have the tendency to do that. And there's a reason a lot of institutions are going crazy. Even the ones that are saying, hey, Jamie Dimon comes at a press conference and says, hey, I don't care about Bitcoin, right? Meanwhile, JP Morgan is one of the biggest when it comes to the digital assets world. They're one of the biggest players right now in the digital assets world as far as the traditional banks are concerned, and a lot of operational processes are being realigned with blockchain, right? There's a syndicated lending protocol that JP Morgan either has released or is about to release, right? That is built on the blockchain, and it has made syndicated lending go from 8 to 6 to 8 month process to a 2 week process, right? And that's just one use case. That's just one example, right? And you see these institutional players going mad over this is because of they understand and they want to gain control of this technology because they understand how disruptive this technology is beyond governments, right? So yes, you're 100% right? Is somebody that grew up in a perfect system can take it for granted, but even people that grew up in a perfect system do not understand how fragile systems can be. It's something that yes, it might never happen in your lifetime, but no perfect system has outlived 500 years, let's say. I think the Roman Empire maybe 1,000 years, right? So the structures are looking beyond that. They're looking at something that could go years and years and years on and basically outlive the test of time.
Interesting, right? Because you brought up the bank, right? And recently, there's a news article that just came out. I'm going to read this little clip. The U.S. Securities and Exchange Commission has rescinded an accounting rule that forced banks to treat Bitcoin and other tokens as a liability on their balance sheets. The guidance was a major deterrent to Wall Street banks owning Bitcoin. The rule was introduced in 2022 and subjected to digital assets to a strict capital requirements, significantly raising the financial and regulatory risk of offering crypto custody services.
Oh yeah, 100%, right? So this has been a back and forth with the SEC for I'm gonna say at least 6 years right now, right? This is a journey that has been 6 years going, right? And the truth is, when it comes to custodial, by the way, right? And this is a problem I have faced. I have been working with a lot of institutional guys that are trying to get exposure to crypto assets, like a bunch of hedge funds in London. I can tell you that getting exposure by these hedge funds to crypto assets is one of the most difficult things ever that has ever happened, and it's because of some of these regulatory restrictions, because of the how crypto assets are treated by regulators and things like yes, it's being tied as liabilities on the balance sheet in terms of the FCA, right? In terms of guidance and processes around holding, it's completely impossible for a traditional fund to literally hold Bitcoin, right? But some of these changes and on these restrictions, and even with these restrictions, by the way, we've seen a lot of institutional play in Bitcoin, right? Some of these changes is going to remove the levers completely, and there was the Personally, right, I think it's a good and bad thing, right? It's a bad thing in the sense that we had the opportunity to take over this technology before institutions did. We didn't, right? I'm talking about the retail players, right? We didn't, right? It's the skeptics that I blame for this, right? They had the opportunity to take over this technology before institutions took over it, right? But institutions are going to be the determinants of the digital asset industry going forward, right? Especially the traditionals, Bitcoin, Ethereum, right? Because there's been this hunger. Like there are companies, there are massive companies, right? Barclays has a whole blockchain department. JP Morgan has a whole blockchain department. I live in Milton Keynes, right? Milton Keynes basically is where Santander Bank, one of the biggest banks in Europe, has their headquarters, right? There was a whole office for blockchain people just there, like 10 minutes away from me, with at least 45 people working on digital asset program. There is this people don't understand what's going on behind institutions in this digital asset place, right? And they've been waiting and lobbying for this regulatory sort of bottlenecks and sort of handcuffs to just go off and play in a big way. And they've been doing this already. And now imagine the SEC has done this, right? Imagine how big these guys are going to go in, right? And I can tell you for free that whatever happens in the US, the FCA is going to follow suit because the traders, London, does not like being more regulated than the US, right? Because it's usually where people go when they find New York to regulate it, right? So the FCA in London is going to follow suit, and you're going to have a lot of massive institutional players going into because it's now being easy for them. You had the Bitcoin ETFs, even the ETFs. There was a lot of restriction about participating in the ETFs, right? But now there will be direct exposure to digital assets even without ETFs. And there is a lot of technology being built around this. You have custodians, right? You have very famous custodians. In the US, you have guys like BitGo, right? Trying to remember a couple of them. I think Fireblocks also has heavy exposure in the US. Internationally, you have companies like Fireblocks, Zodiac Custody, who's headquartered in London. Um, Copper, right, also headquartered in London, right, with massive exposure in the US. A lot of these guys have been building, and I can say this because I've been part of some of these processes. A lot of these guys are building processes that enable institutions own and manage digital assets, right? And the subscription tickets, these are companies that were what, let's say, a 5 million quid 4 years ago, but now they're what, billions of dollars. That is because these big institutional guys are on their books and they do not want to use an ETF. They want to have direct exposure, right? But they need a way to custody this in a safe way. And these people have built a lot of technology around custody. They've built a lot of insurance instruments around Bitcoin custody. Like Bitcoin insurance has one of the cheapest premiums these days because it's easier these days to custody Bitcoin than to custody so complex derivatives against fundamental assets. So yes, 100%. This is something that has been lobbied for a while, and is going to unlock a lot of things. This is one of the reasons I believe, with what I've been seeing, that Bitcoin is still massively undervalued.
Massively undervalued at six figures. Starting at 100K. So a few things can you help everyone with? What is Bitcoin ETF?
So, okay, let me start with what an ETF is, right? An ETF is simply an exchange traded fund, right? What it means is, hey, I take this something, in simple terms, I take something that is not traditionally tradable on a traditional exchange, we package it into an asset and trade it on an exchange. That's just what it is, right? And you have famous ETFs, for example, the S&P 500 indices run by Vanguard and a lot of the big traditional investment firms, right? What they do is, hey, personally, I don't want to go stay here. I want to buy like 500 stocks in the S&P 500. What they do is that they create an index around this that underlying backed by these assets and traded on an exchange. And you can have direct exposure to the S&P 500, right? So what the Bitcoin ETF has done is that it allows Bitcoin to be traded in traditional exchanges. That is, what do I mean by traditional exchanges? Exchanges that are not crypto exchanges. The Chicago Futures Bureau being the most popular one, right? The London Stock Exchange, the New York Stock Exchange, and the rest, the Nasdaq, right? It just enables this to be traded on these traditional exchanges and as a normal traditional asset class. And what it does is it eases institutional participation in Bitcoin, right? Because if an institution wants to invest in Bitcoin directly, right, the cost of custody, cost of, in fact, there is a very good chance that if you do not understand a lot of the processes, you will lose a lot of money. You might lose 10% of your investment. But what an ETF does, it gives institutional participation and makes it easy at very low, at a cost of literally less than 50 basis points, right? And gives you that exposure to Bitcoin. While the people packaging the ETFs take through economies of scale, economies of scale, right? Properly manage this underlying asset and just repackage it as this ETF.
Yeah, I got it. So, make sure your definition, right? It makes it, if you have a like a pension fund or some sort of fund, it makes it a lot easier from on an institutional side to get exposure to Bitcoin without actually owning the actual Bitcoin. It's packaged up so it can be exchanged. I mean, it could be bought on an exchange per se. Okay.
Exactly. It's like gold ETFs. I think that's a very popular one, right? You know how expensive it is to hold gold, manage gold, right? If I'm going to buy, let's say, $1 billion worth of gold, I need to buy a whole warehouse around that and hold it. And the security situation, you could get robbed of the gold, right? Why don't they give experts to do this, hold this, and package gold ETFs around it and sell it? So it's literally the same thing in that case. Yeah.
What's the difference, right? I was to ask this, like, what's the difference? Like, I don't know. Bitcoin price when I did the notes was at 102. It might be up, might be down. But let's just say hypothetically, right now, Bitcoin's at 105,000. I had 105,000. I go to an exchange like, I don't know, Coinbase, for instance, transfer 105. I own a real Bitcoin, or I have 105,000 and I bought a Bitcoin ETF. What is the difference in terms of from the investor standpoint?
Okay, so I'll give you the two different types of investors, right? So let me start with the retail investor, right, which is more straightforward, right? For the resale investor, sincerely, there is not much difference, right? But the difference is your whole Coinbase is custodying your Bitcoin, right? So there are two ways you can buy it. You can buy it and then move it off Coinbase to your private wallet. In that case, you're responsible for custodying your Bitcoin, right? Or you can buy it and leave it on Coinbase, right? And in that case, Coinbase is custodying your Bitcoin, which is not a very good idea, right? So, right, because exchanges can go bust, right? We've seen this with FTX. Yeah, you might say FTX is a
Yes.
special case, but the truth is, if you go into the balance sheet of a lot of exchanges, you would know that letting them custody your assets is not a good idea. Just buy and get out, right? So it's either you buy, move it to your personal wallet, you buy, you let Coinbase hold it, right? But using an ETF, so let's assume it's a Vanguard ETF, for instance, right? What you've done is that you've passed on the responsibility for custody to Vanguard, right? So you're buying the exposure to Bitcoin and you're passing on the response, which I can tell you for free Vanguard has a more diversified custody solution than Coinbase has, right? Which is funny, right? It's a story for another day, right? Exchanges versus investment firms and how they're doing this thing, right? So, but sincerely, for a retail investor, there is not much difference, right? For an institutional investor, is massive, right? Because having so let's assume I run some high street hedge fund in London and I need exposure to, let's say, $500 million worth of Bitcoin, right? If I buy $500 million worth of Bitcoin, first of all, I cannot let an exchange hold this $500 million. It's just too crazy to do that, right? Either we custody it ourselves, in which I can tell you the cost of that custody because of not having the perfect infrastructure to custody, right? You might end up building a $50 million infrastructure to custody $500 million worth of Bitcoin, which doesn't make sense financially, right? Another problem is I can't even buy $500 million worth of Bitcoin, right? As an institution, right? It's crazy, but I can't, right? There is not much when it comes to liquidity in exchanges, right? You see billions, but if I drop in a $500 million buy on an order book, right, it's going to crash. It's going to literally drive the price of Bitcoin massively, right? And one of the ways exchanges try to bypass this is OTC DEX, in which I consult for a company in Nigeria that has a massive OTC desk, right? But I can still tell you one thing, right? As much as you try to hide orders via the OTC market, right? most of the time in the OTC markets, right, these orders get routed to multiple individuals. And once the market starts smelling that there is massive demand, the price is going to go haywire, and you're not going to have what they call volume weighted pricing, right? I don't know what the perfect easy term to use for that, right? They're going to call VWAP, volume weighted average pricing, right? The VWAP is going to go skewed totally, and you're going to end up buying $500 million worth of Bitcoin for $1 billion, right? So even that, right, the liquidity is also not there for you to buy that amount of money. But an ETF gives you that amount because they've already costed billions of dollars worth, written up assets against it, and you can easily fill up a $500 million order in 1 second, right? Would it affect the price of Bitcoin? Yes, it would, but only after the fact, not pre the fact, right? So it's something that is a very big deal for institutional players, right? And that is one of the reasons a lot of institutional players want to have exposures to Ethereum, XRP, big digital assets with very massive use cases. Solana, which has become very popular, and trying to remember, yeah, and for the crazy Tron, right? And Tron is a whole other ball game, right? Someone from Africa, right? Nobody understands the influence the Tron blockchain has had on transactions in Africa. It's a story we can talk about if you want today, but it's something else, right? It's not a blockchain I like, but the truth is that it has had more impact on retail use in Africa than any other blockchain. So, but that aside, right? So they wouldn't have exposures to all these counter alternative assets, right? But without ETFs, they would not be able to do that because they cannot buy and custody these things themselves. It's a very complex process for them. Yeah. I can tell you for free, if you have $500 million worth of cash right now, and you try to go into the market to get $500 million worth of Bitcoin, you're going to get hacked. I can tell you for free. There are people literally waiting for you to make that move, and you're gonna get hacked, and you're gonna lose $500 million worth of Bitcoin. So, yes, it's crazy. Yeah.
Oh, okay, interesting stuff. I wanna I want to make a distinction too, because when you talked about banks having divisions for blockchain. So I talked to some people who are skeptical of Bitcoin, but they believe in blockchain.
Yes.
They believe in the blockchain technology. They don't necessarily believe in the crypto. They don't. They don't even feel crypto's a real asset, but they do believe in use cases for blockchain technology. In this particular argument, what are your thoughts?
Oh, the truth is right. They're 50% correct, right? You're wrong when it comes to Bitcoin and a few other cryptocurrencies, but you're correct when it comes to things like meme coins. Yeah, and I'll come to that, right? I think that's a whole other topic, like meme coins and the advent that's just the worst thing that's happened to the crypto world in years. But I'm gonna come to that, right? So yes, the use case is very important, but a question I'll throw back at them is, what have been the biggest validation of the blockchain use case? Is Bitcoin. It's like you're saying that, hey, you believe in the iPhone, but you don't believe in Apple, right? Or you say, hey, I believe in I love the Samsung Galaxy S24. Hey, there is no stock for Samsung Galaxy S24. It's a Samsung stock, right? So it's like saying I like the technology behind the product, but I do not like the product, right? There has been no bigger validation of the blockchain use case than Bitcoin, right? Bitcoin has validated the use case more than any other thing built. No matter what the banks come up with, no matter what anybody comes up with, there is going to be no bigger validation. I'm not saying there'll be no bigger use case. There will be no bigger validation of the blockchain use case than Bitcoin. So that doesn't make sense to me, right? Because the creation of the blockchain, right? And that is why it's up. Go read the Satoshi white paper. Right? That is how I got into this. Go read this white paper. It's going to expose you to a lot, right? The blockchain, the whole invention of the blockchain created Bitcoin, right? Like you're not have there been distributed ledgers? Distributed ledger technology is not a new thing. There has been distributed ledger tech as far as I read a scientific paper written in 1978 about DLTs and Byzantine proofs. Right. I don't want to go into the computer science terminology, but it's something that has existed for a while. But what is the difference between the existing DLTs and the what Satoshi came up with in 2008 is Bitcoin, right? It's literally the creation of Bitcoin. So it's like saying you don't agree with it with the example I gave, right? You don't agree with Apple, but you love the iPhone. That's just silly, right? So in terms of would a lot of use cases come up on the blockchain? Yes, 100%. There are a lot of private use cases, like I said, being used by banks and institutional funds and other people, right? In Africa, for instance, right? I can't even go into how there are importers that without cryptocurrency, right, and stable coins also, they cannot do business right now in Africa. So
Wait,
many African countries.
repeat that. There are what they can't do businesses?
I think there are importers, exporters, right,
Okay.
or even companies that are just trying to get like some sort of resource from another country, right, that cannot do business without cryptocurrencies
Oh wow.
because the foreign exchange markets in these places, right, and let me be specific, places like Nigeria, places like Ghana, Egypt, Ethiopia, Malawi, to some extent Kenya, Uganda, Zimbabwe. Oh my God, Zimbabwe, Tanzania, and right, the Gambia, right, Sierra Leone, Liberia, right, the whole Zaf and Zof region, any place that uses the Central African francs or the West African francs, which is 13 other countries, right? It's very difficult for people to do businesses without cryptocurrencies. The truth is, a lot of them are doing business because of cryptocurrencies, but they do not even know. How do I know this? Because we facilitate a lot of the exchanges that go on with these people, right? Because right now, the foreign exchange market in this country is a very illiquid, right? Because you have a lot of governmental uh, artificial control over foreign exchange markets, right? And what we do is because there's liquidity for cryptocurrencies in this place, so we use cryptocurrencies as bridge assets, right? Between two fiat currencies, between let's say Nigerian naira and USD, or Ghanaian cedis and USD, or USD and Nigerian naira. You use stable coins or other cryptocurrencies as bridge assets, right? Because there is liquidity for these currencies, but there's no liquidity in traditional foreign exchange market. So a lot of facilitators and even IMTOs are leveraging cryptocurrencies now as bridge assets to be able to find liquidity for foreign exchange in so many of these countries, right? And even some of these importers, exporters, people with cross-border exposures, foreign companies doing business in Nigeria and elsewhere, some of them even they know what's going on, so they come to the digital asset market directly, right? And then there are some that it is usually so a company around in Nigeria, one of our biggest clients base is PSPs, right? And a lot of these PSPs are facilitating things under for a lot of these guys, and they just do their exchange. They're using stable coins, but they don't even know that stable coins are being used to facilitate because you cannot go into the bank in Nigeria and use your naira and buy dollars. You can't. You cannot. It's virtually impossible to do that in Nigeria, right? And for an importer, it's going to take you at least 4 months to even get just $50,000 worth of liquidity from a bank, right? After filling so many forms and doing, and there is a very good chance that you wouldn't end up getting it at the end of the day, right? So when it comes to these use cases, people don't understand the power of decentralization. So saying you love the blockchain without understanding is not understanding the use case behind Bitcoin. It's not understanding the use case behind Ethereum, right? Ethereum literally. So and I like I said, sometimes I do not blame these people because a lot of nonsense goes on in the crypto space, right? A lot of shit, pardon my French, right? But a lot of utter nonsense goes on in the crypto space, right? And you have like things like meme coins, right? Oh my god, I have been the number one critic of meme coins, right? And sometimes when I see people come up with meme coins, and from even the first ever meme coin, which is Dogecoin, and the nonsense that comes up with those meme coins and the utter nonsense that goes around it, right? It makes the crypto space look like a joke. It makes the crypto space look like nonsense, right? And if you are somebody that is analyzing the crypto space based on those individuals that promote these things, right, you will get irritated by it, but you then lose focus of what exactly is actually going on in the crypto space. You lose sight of the actual use cases that Bitcoin, Ethereum, or Solana, or Ripple, right? So many people don't understand what Ripple is doing in the banking sector, right? Like that is a massive use case, right? Like you then lose sight of what these digital assets are doing. And what is digital assets, for example, what is Ethereum? Ethereum is the facilitation currency for the Ethereum network. What is the Ethereum network used to do? It's just to create training, ERC-721 tokens. What is our ERC training? ERC, these are tokens that have massive use cases. Yes, the people use them to do nonsense like meme coins. Yes, but it's like saying that, hey, the US dollar is used to sell in human trafficking or drugs or whatever, right? And then now say that because of that, the US dollar is nonsense. Meanwhile, forgetting that, hey, you still use the US dollar to buy and sell everyday things, right? So yes, if you focus on the bad use cases, you're going to get lost. And it's quite unfortunate that the bad use cases get all the noise, right? They get all the marketing. Like people launch meme coins and people think these things mean anything. They're utter nonsense, right? To the extent that, and which is one of the reasons I'm skeptical about the direction a lot of digital assets proponents are going, right? Is because of things like this, them to even like very notable figures releasing these coins, and you just ask yourself what the hell is going on, right? And you find people that are like 2 seconds from being crazy and mad, right? Telling you that those meme coins are the end of the world and they're the all in all, and a lot of them being pushed by degens, basically, right? And you know, this is not crypto. This is not the blockchain we're looking at, right? But like I said, the real use cases are also being built, and it's important to not lose focus of that.
So I mean, a lot to unpack there, right? So first, let me address some people from the chat, like they're coming up. So a friend of mine asks, "Am I in tech?" Yes, I'm in tech. Check out the Tech Behind FinTech.com, and you can view the website. My bio's there and some links, and been at it for a while. So a few things. I definitely think a lot of the skeptics associate the meme coins with Bitcoin or Ethereum, or just they just associate everything in the bag. And I mean, look, granted, there have been rug pulls, right? Like you said, you can use the Ethereum technology to create a meme coin, and literally me and you can take a break. Me, you, and ChatGPT right now can figure out how to create some BS coin, pump it up, right? Get everyone to buy it, and then step away and sell our stuff and leave them holding the bag. This has been done over and over. Celebrities have been used as marketing engines to do this. People have lost a lot of money. So, from one side, I can see how it's fair from everybody to say, you know what, crypto, I'm done. It's a scam, right? But to your point, right? If you really start understanding the underlying nature of it, if you start reading some white papers, understand the use case. I love the analogy, by the way. Would you throw your iPhone away? Like you just like saying you like the iPhone, but you don't like Apple. I love that analogy. I think it's brilliant. But to your point, right? There are other use cases. Because I pride myself right now at this stage of not being extremely passionate one way or the other. I'll be totally honest. I find myself more as a capitalist, and if I could put my money somewhere and it can grow, and that's what I'm about, right? I'm not riding a white flag for either side. I take in all the arguments and I'm like, okay, I get it. I have to also say, right, there's some people who just look at crypto in encompassing everything. There are specific blockchain technology use cases outside of the cryptocurrency that can be leveraged to do all sorts of interesting things. And that's happening. And that's one of the things where you look at, even though you mentioned JP Morgan and Jamie Dimon, a long-term critic of crypto, not necessarily a long-term critic of the actual blockchain technology, which they have departments that specialize in research that. So there are various differences there that I don't think a lot of people, like I said, you know, I hear a lot of arguments where they just group everything to a bag in one bag and just say, I'm done with this. This is crazy. It's going up and down. It's literally gambling and things of that nature. And I, you know, just from a pure technology perspective, I don't think that's the right approach, right?
Oh yeah.
I think you have to understand the nuances and understand it, right? Beyond just the crypto itself and beyond the meme coins, just understand what's happening, how it's created, and the different dynamics within it, and how different things can be leveraged. So I wanted to also say, it was another news article. It said ransomware gangs extorted over 1.1 billion in cryptocurrency payments from victims in 2023, according to the data from blockchain analytics firm Chain Analysis.
Well, you see the ransomware part. It's something I nearly personally experienced, right?
Talk to me about that.
Back in 2018. So I wouldn't call the project name, right? But there was a project I was consulting for, right? They had the funny thing about the project is, right, they were heavily in the digital assets industry, right? But they didn't understand the security protocols of the digital asset industry, right? So when they brought our company in then to sort of audit their processes and check a lot of things, right? We sort of we noticed a lot of flaws in how they did. In fact, even the multi-sig system was very flawed. There was a lot of centralized key holding, right? The keys were literally dependent on two people, right? And we had to reorganize there. I think that was when I started getting to learn about multi-party computation. And we set up like an MPC protocol for them to use and manage their keys and actually use digital asset principles to help them manage their keys and all those things. And the truth is, just 2 weeks later, after we completed that migration, right, uh, the two people that were the central controllers of those keys got something they were not supposed to click on and clicked on it. All the data got sort of locked up, and the hijackers basically were asking for I think it's then it was worth almost $500,000 worth of Bitcoin until they release it. And luckily for them, because of how a lot of things have already been segmented, they told the attackers, go to hell. Yeah, you can have all you want, right? But meanwhile, if it was just 2 weeks ago, right, and that happened, they were in shit. I don't even think they had 500K to pay, right, for those kids. The company would have gone bust at that point. Yeah, they do now, but then they didn't, right? And they would have gone bust, right? So when it comes to the thing about ransomware, is because a lot of you've told me a bit about your background in cybersecurity in the past, right? But it's just bad cybersecurity in that case that makes a lot of companies get vulnerable to the whole ransomware attacks, bad security audit processes, bad processes, inability to train your staff properly. Even if you train your staff properly, you should assume everybody's an idiot, right? And just treat everybody like that. No matter, even the people with a 200 IQ, treat them like an idiot, right? And assume they're going to make mistakes and create backups and creates like alternative protocols and creates protocols. So it's one of the reasons people fall for ransomware attacks, because these processes are not properly outlined, right? And yes, it's a very big problem, right? So ransomware attacks predate crypto, by the way, right? It's just that crypto has become a very useful tool because of the ease of basically making these payments private, right? But even these days, right, it is harder for a ransomware attacker today. Whatever number you're seeing is less than it was in 2019. It's harder for a ransomware attacker today than in 2019 because a lot of let's assume the hackers get paid in Ethereum, for instance, right? the Ethereum Foundation can make whatever money they're receiving obsolete. If they're paid in stable coins, right? The networks behind this can blacklist those wallets, and any funds coming out of those wallets could be made. These days, you have a lot of like Chainalysis, which is the auditors of this report, Elliptic, and a couple of others that you can easily be able to trace where whatever is going. And a lot of people are using these tools, and it's very difficult to change blacklisted funds. And there are ways to do this. Yes, it's one of the reasons Tornado Cash is still having problems with the SEC. And personally, I think Tornado Cash should have problems with the SEC, right? But even all these type of protocols are being fought against these days. So yes, is it a problem? Yes. Is it much of a problem like it was in 2019? No. There are
So,
improvements every day against us.
look, I think we're gonna run it until like the very end because so much to like.
Yeah.
I gotta have you back on the show, man, because there's so much to talk about, and it's like I want to get into this. Another argument similar to the ransomware, and because of the way we can transact, is that early arguments was Bitcoin's only used for illegal transactions,
I've
and
had that.
of illegal transactions was a company called Silk Road, in which literally it is
That's
an
how
online auction place for everything illegal you can think of. And the main currency that was used to buy these things was Bitcoin. Recently, I'm bringing it up because recently our current president, Trump, just pardoned the founder of Silk Road, Ross Ulbricht, who had, I think he had a few life sentences actually. So he was just pardoned recently. And, back then, it's funny because I did my master's in cybersecurity, and one of my professors worked for the FBI, and he was on that case. I did the master's in 2015, so he was on that case in 2013. He was just talking about the way they got this guy when he left his laptop open somewhere, and they pretended to be someone else, and they got access. But if he would have closed his laptop at that time, they would not have found him because they arrested him right before. So it was an interesting story. What are your thoughts on that?
Pirate robots, yeah.
Huh?
No, that was a joke. That was a joke for crypto. That used to be his nickname, Russ Albridge. That was the moniker he used on the web. Dread Pirate robots. Right.
What are your thoughts on that in terms of that argument?
First of all, I don't understand why Russ Albridge is being pardoned, right? But that's another story, right? The truth is, like I said, the bad actors would be in every technology, right? In Nigeria, right? People don't launder money with the Nigerian naira. People launder money with the US dollars, right? 20% of use case for US dollar in Nigeria is money laundering and some sort of corruption and people that stack money in their houses and things like that, right? The drug trade in a lot of places is facilitated by the US dollar, right? A lot of bad things go on with the US dollar, but do I say that the US dollar is a currency meant for only illicit activities? They'll say no, because that's like 1% of the use case. Was there a time that 20% of the use case of the use of Bitcoin was for illegal activity? Yes, as far back as 2014, right? Well, I can tell you with confidence that now it's less than 1%, which is almost the same ratio with the US dollars. So, like I say, people have a way of focusing on the wrong things, right? There is a I don't want to say it's a common phenomenon. Sometimes it borders on psychological disorder, right? To have like you have multiple variables affecting something, and you focus on the negative variable and ignore like you focus on the one negative variable and ignore the other four negative positive variable. Like even in statistical research, right? That's one of the worst mistakes you can make, right? So yes, a lot of people use Bitcoin for illicit activity. A lot of people use a lot of cryptocurrencies for illicit activity. That's like 1% of the ecosystem, right? If you ask me, what's the main use case for Ethereum? Is to facilitate error security tokens. It's as easy as that. That's 99% of the use case. Does that mean that there are no 1% using for illicit? Of course, yes. And do you know the truth, right? These days, right, one of the reasons people get away with illicit activity with cryptocurrencies is because law enforcement in many countries have chosen not to educate themselves on cryptocurrencies. I'm going to use Nigeria, for example, right? We did a lot, right? I helped someone that was training. I helped someone prepare training materials that was supposed to train some Nigerian law enforcement agencies, the EFCC, the ICPC. Those are financial crimes organizations, and the actual Nigerian police on how to detect crypto transactions. As I'm speaking to you, right? Nothing has been implemented. The people that attended that training, none of them still understand anything about even analyzing just simple tracing a transaction on chain. They do not even understand that. And would they employ the people that understand this? No, they would not, because it's an inefficient system, right? So in Nigeria, there are a lot of people that use cryptocurrencies for illicit activities. And the reason they get away with it is because the law enforcement bodies do not even understand the basics of the blockchain. It's actually easier to trace a crypto transaction in Nigeria than to trace, let's say, a Naira transaction. Because a lot of people kidnap people, get their bank accounts, and use it for illicit transactions, right? Meanwhile, for crypto, there is a trace down to the exchange point, right? And this is what a lot of this is data that a lot of exchanges willingly share with law enforcement, right? And because law enforcement does not understand this, then people get away with illicit activity. The FBI has done a lot when it comes to crypto, right? But the problem is that is the only organization in the US. Like, does a local police department handling a $800 illegal transaction understand crypto? No, they do not, right? And unless that case is part of a bigger FBI investigation, is going to get lost, and the criminals are going to get away with it, right? So it's more or less, crypto is actually easier to trace because all crypto transactions are published, right? Than even a cash transaction. A cash transaction is harder to trace than cryptocurrency transactions, which is funny. But the problem is, law enforcement have decided they do not want to learn this, and they're not getting the people that understand this into the law enforcement, right? I was reading a story. The UK law enforcement, they were trying to hire blockchain experts for blockchain financial crimes thingy, and then they end up employing I don't know what to call it, right? More or less people that are not very knowledgeable of the organization. Maybe somebody that has the book knowledge, basically, but not the practical knowledge, right, of how crypto works. And the truth is, those people don't really understand crypto. But if you don't interact with crypto on a day-to-day basis, there's a lot you would not understand, right? But don't bring in these people, right? So I still put the blame on law enforcement. Bring in people that understand the systems to train you guys on actually how this works. Bring in people that have that particular knowledge, right? And it's a global phenomenon, right? And if the FBI didn't have the amount of knowledge base they had with respect to blockchain, actually getting people to go undercover into this sort of cyberpunk societies and actually understand a lot of these things, they would have never ever been able to recover the big stash of Bitcoin that the FBI has today, right? So I do encourage other law enforcement to look into this. Yeah.
Listen, I absolutely love when you're on the show. We cannot wait as long as we did. I think the last time we were on the show was like early last year. I love it because the same passion you have for the blockchain technology, for crypto outside of meme coins, um, you know, is I have conversations with people on the opposite end who are passionately skeptic of it. And every time I talk to you, I smile because when I talk to both of these different parties, the level of passion you guys have for it on opposite ends. So I said this before and you agreed, but the other people have not stepped up to the plate. I want to do a show where I get both of you on and let's go for it, man, because they always talk. So what happens is this: you come on my show, then I get a phone call from someone arguing with me about, well, he doesn't understand this, or this doesn't work like this, or I'm skeptical. And I'm like, listen, I hear you. Why are you talking to me about it? I don't have a dog in the race. Come on the show, right? And let's have a real conversation. And you can tell to him, dude, every time you're on the show, the people who are passionately against Bitcoin, crypto, they call me up and they hit me on DM. They start arguing. I'm like, why are you arguing with me for? Like, come on the show. Let's have a real conversation. But they're like, okay, we'll see. I'm like, no, come on the show. So I'm calling it out. My guy here is ready. He's been ready for years. He stands on this. So, I just have to say that, because I'm going to get another call this weekend, and they're going to watch this episode and they're going to start arguing with me. I'm like, why are you arguing with me for? I'm not. Come on the show. Let's have a conversation. I'll bring Chiagozie back and we'll go for it. So I have to say, listen, I want to thank you for being on the show. Every time you come, I learn something. I get a different perspective, or I get a widened perspective on crypto and the technology. And I just appreciate you so much. You've been one of our more frequent guests, but even though it's been literally a year, I think the last time you were on was January 2024. So I'm really happy to have you back with this conversation. What we do now is we give the floor to our guests. So you can talk about, I know you got a lot of projects in stealth mode you're doing, but whatever you want to make public, tell people how to find you. I'm going to give you the floor to do that.
Okay, so basically, let me say there are two projects that I'm working on that will go public. One is Ledij. What Ledij does is it basically creates liquidity for stable coins in Africa, right? We currently have the presence in 13 African countries. We're getting regulated by the Nigerian Securities and Exchange Commission. We're currently in a regulatory incubatory program. We're also about to get a license in places like Malawi and in Kenya and Uganda, where we're going to have the equivalent of a money transmitter license. And so basically just liquidity, right? We'll make sure there is liquidity on exchanges. We'll make sure there's liquidity for stable coins. We'll make sure there's liquidity among PSPs. We'll make sure there's liquidity in the foreign exchange markets with stable coins as a bridge, right? And we're trying to pioneer basically the African stablecoin ecosystem, because this is the future of the African currencies market, right? And I'm also working on an AI-based product called MVP Genie, right? And I'm going to be releasing this product within the next few days. We're currently beta testing a few things, right? It's a product that enables entrepreneurs to help them validate their ideas, just the basic things a product advisor would do for an entrepreneur at first, right? Well, the aim is to automate a lot of those processes, and we're going to be rolling it out very soon also. And so find me. You could reach out to me on LinkedIn, Chiagozie Iwu. I don't think there are two people with that name on LinkedIn, and I don't do so much social media, right? But Facebook, Chiagozie Iwu, and you could always reach out to me on any of these two platforms, and I'll respond.
His name is in our show notes, so whatever platform that you're viewing this on, whether it's Facebook, whether it's YouTube or LinkedIn, Chiagozie, his name is in the show notes, so you can reach out to him there. And on LinkedIn, there's a link to his LinkedIn page. We posted it on this event and so forth. And also, if you put his name on our YouTube page, you'll find other episodes where he just sheds light. It's just really great episodes over the years of talking to Chiagozie. So, like I said, I always appreciate you on the show. You're one of my favorite guests, because all through the show, I'm always smiling, because literally, not only because of what you're saying, but because I have this individual, one particular individual. I'm not going to name his name. I'm not going to call him out, but he's going to call me. And he's going to start talking to me for like an hour about why all his skepticism about crypto, and I always tell him, that's cool. Come on the show, and he's a smart guy in his own right, brilliant individual. But I'm like, come on the show. Let's get into it. So that's why I'm always smiling when I'm talking to you, because your passion and his passion on the opposite side, I find absolutely using as hell. So on that note, thank you very much for coming on the show. Like I said before, you're a friend of the show. When things pop up in the news regarding crypto, you're one of the first people I call. We'd love to get you back and just break things down and help our audience understand some stuff. So thank you very much. It's been a wonderful show. To everybody viewing, my guy Hamid, thank you for viewing. You dropped a lot of stuff on Instagram. Definitely, if you want to be part of the show, if you add your comments to go into Tech Behind FinTech next time, and you can see both the guest and myself. So thank you for watching. I really appreciate you. And on that note, to everyone else, like I always tell people, right? Whether you watch the show live, whether you're watching the show tomorrow, whether you're watching it next year. We appreciate you for your viewership. Last note, we launched a newsletter, a weekly newsletter, which you'll get all the news on FinTech. You'll get some information about our upcoming episodes and so forth. Definitely drop it in. I'm gonna put the link to the newsletter on our in the show right now. It's Tech Behind FinTech /subscribe. Let me add it to the let me put it in a comment so we can add it to the show right now. You definitely want to subscribe to the newsletter. You'll get in your fingertips, your email delivered. You'll get all the FinTech news. You'll get interesting insights, and we're just growing and expanding. So jump on board. It is definitely worth it. And guess what? It is free. So you want to be part of that. Tech Behind FinTech /subscribe to our newsletter. On that note, everyone, have a great weekend. My friend, my brother, thank you very much once again. Always a pleasure talking with you and seeing you. And we'll chat again. Take care.
Pleasure is mine. Cheers. Cheers, everyone.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.